in very, very weak. Sumit Podar is now with us. Sumit, let's start with what's really happening in the markets. Every attempt that we are making, even a 50-point, 100-point bounce is not being able to sustain, or some of the other bad news comes. What do you make of the sentiment which have suddenly turned in the last 20 days?
Hi, good afternoon, Pankaj. Thanks for inviting me to your show. Of course, times are a bit volatile. It started while 2022 was very strong as far as India market was concerned. But I think the new year or 2023, we are seeing slurry of bad news as such. Rather, it started from one large group news as far as India is concerned. And post that, of course, we have seen fall of banks in United States. Credit Suisse kind of changing hands at a very cheap valuations. Of course, this is about part of worry, but at the same time, Indian financials continues to be strong. This is more sentiment impact as well as the global flows impact. We have already seen in 2022 as well as start of 23 global FIIs coming out or kind of selling out their investments in India. But this seems to be more a larger play where lower liquidity is what is impacting the outflows. Coming back to fundamentals of India, of course, India, if you look at COVID crisis, they have the healthcare crisis itself. They came out much stronger in this particular crisis. Similarly, if you look at the financial crisis that is looming as of now, the bank's balance sheets continues to be strong. Rather, in the last since GFC, India is the only country where there has been deleverage as compared to developed worlds, which would have kind of leveraged almost 2 to 5x compared to what they were pre-GFC. So what is happening is, of course, our balance sheets are much stronger. And just like in many of the crises, India has come out much stronger, as I said, rather it be healthcare crisis or energy crisis. Both the times, actually, India has rather shown characteristics of being anti-fragile. I mean, every other guy was a bit skeptical about capabilities of India, rather it be handling the COVID crisis or, for that matter, energy crisis. And now we have kind of come out much stronger. And I'm sure this is further an opportunity for India to come out much stronger in this crisis. No doubt, with the crisis that is happening across the world, is likely to impact the sentiments and thereby the flows. We need to really be on watch out for what happens, and more so with these two events that have happened. The confidence in terms of
Right.
central bank put has kind of been taken away, because now it is central banks or governments are looking forward to ensure that these crises are being handled by the sector
Absolutely.
itself or so. So in a nutshell, India is well placed. Sentiments are likely to
Absolutely.
impact, but once this is settling down, possibly
Right.
will come out much stronger than what we were.
Absolutely. So, with also just want to understand in terms of anything that you're looking from, like, now given the current scenario, what are the sectors that you would watch out for? Then anything interesting right now?
So, as we discussed, of course, the global sentiments continues to be soft, and in such a scenario, it's better to focus on the domestic sectors, rather it be kind of a manufacturing or a capital goods sector, which is what is likely to see much better situation as compared to the global exports as such. Within that, of course, in order to save the portfolio, or maybe in order to be defensive, of course, FMCG continues to look better from a medium term perspective. But once all this settles, possibly there are, I mean, one shouldn't really go away from banking because they continue to be strong. Rather, such negative uh, mm, sentiments or negative flows gives an opportunity to build a portfolio for long term. So, private banks definitely continue to be on the strong footing as far as long term compounding story is concerned. And these are the times where you actually accumulate gradually. Of course, may not be immediately, but gradually. And of course, domestic stories continues to be much more attractive as compared to the global ones on an immediate basis.
We've seen that, for about 12, 15 years, investors have not liked steel companies that, give a lot of orders, or capex related companies. But, despite all the turmoil in the last 6, 12 months in terms of news flow, in terms of markets not performing, money being tight, we've seen order inflow activity being pretty strong. What do you make of it, say, if, and even if rates remain at these levels and if execution goes through, what do you make of it?
So definitely, Pankaj, you brought out a very good point as far as the order book continues to be strong. Rather it be the domestic private capex companies, ABB Siemens kind of companies, or smaller companies as well. And on top of it, also what is happening is we are seeing the privatization or private companies being involved in the defense work. That will also help uh, the order flows flowing into smaller capital good companies as such. So defense work or import substitution work is what is at play, and similarly with maybe electrification of the largest transportation sector, we could start seeing power capex as well coming back, while greenification of power continues to be a story. Possibly some part of thermal will also come back, given the fact that we are at the peak utilization as far as power is concerned, and I'm sure we all are feeling the heat that is there in place. So of course these are the near term plays that one can really look at as far as the domestic story is concerned.